A bankruptcy filing attributed to Alameda Research estimates the company has $10 to $50 billion in liabilities. Crypto exchange FTX filed for bankruptcy in the U.S., the company announced Friday. CEO and founder Sam Bankman-Fried also resigned his role, but will assist in an orderly transition. In the short term, we have some long days and hard work ahead of us, Ray told employees in a message verified by CoinDesk. He called the bankruptcy filing the beginning of a path forward. A bankruptcy filing said Alameda Research had between $10 and $50 billion in liabilities and a similar range in assets, and estimated that funds will be available for distribution to unsecured creditors. FTX Group, which includes the FTX.com entity as well as FTX US, Alameda Research and approximately 130 additional affiliated companies, have all filed for Chapter 11 bankruptcy proceedings, according to a press release. Chapter 11 bankruptcy proceedings are filed when the company hopes or expects to be able to restructure its operations, rather than Chapter 7 bankruptcy proceedings, which just liquidates assets. Companies filing for Chapter 11 bankruptcy are able to continue their day-to-day operations. FTX Digital Markets, FTX Australia, FTX Express Pay and Ledger X, which does business as FTX US derivatives, are not included, the release said. The FTX Group has valuable assets that can only be effectively administered in an organized, joint process, Ray said in a statement. I want to ensure every employee, customer, creditor, contract party, stockholder, investor, governmental authority and other stakeholder that we are going to conduct this effort with diligence, thoroughness and transparency. Events have been fast-moving, and the new team in place only just began, he said. Bitcoin's price immediately fell over $1,000 on news of the bankruptcy, dropping to $16,500 within minutes. Bankman-Fried announced FTX had liquidity issues earlier this week, first saying Binance had agreed to acquire the company before Binance pulled out and later announcing a deal with Tron's Justin Sun to backstop TRX-based tokens. The status of this deal was unclear at press time. FTX paused withdrawals, though FTX US withdrawals remained unaffected. FTX reopened withdrawals in the Bahamas at regulators' urging and began announcing certain other jurisdictions had begun some partial withdrawals over the last several hours. The full list of companies include Alameda and various local holdings, BitPesa, Blockfolio, over a dozen FTX entities and Quan, among others, according to a bankruptcy filing. If FTX can't find $8 billion in the next few weeks, they will be forced to sell all their assets on the open market. This could potentially make Bitcoin go as low as $12,000, and this will mean that all FTX customers will at 99% certainty lose their cryptos.